All right, everybody, we are going to be doing our notes a little bit different here for a few days so we don't fall behind. If you are comfortable using the electronic forms like Cami or DocHub to do your notes, that's fine. If not, just do your notes on a separate sheet of paper. We will copy these over to paper copies of the notes when I return. But until then, I don't know that you'll be able to have paper copies. So just write them down somewhere for now so we can transfer this all over later, or at least you'll have them. Same thing with your homework. Any homework assignment, worksheets, whatever that I post over the next few days, make sure that you either, if you do them on Cami or DocHub, that's great. If you do it on paper, whichever you prefer is fine with me. Either way, you got to make sure that your writing is legible. So when you upload it, I can read what it is. It doesn't look like scribbles. If you're taking a picture of your homework and uploading that, make sure the picture is clear. So just make sure that you double check that stuff before you submit it. If you are not familiar with doing this from last year, please let me know so that you're not falling behind and getting zeros on all these assignments, because you will have to submit everything on Google Classroom until I return. So if you're not comfortable doing this, you can either ask a classmate to help you out, or like I said, just send me an email and I will walk you through that individually to make sure that you know what you're doing. Okay, so here we go. Let's get started on these notes. Make sure you have your calculator out and you're trying these. So Sam and Steve are going to take out a single payment loan to start a construction business. The loan is for $50,000 and one more zero. So $50,000 for 180 days to start a construction business. We want to multiply this first of all by our interest rate, which is 8%. And we're going to multiply this by 180 days divided by, and since this says ordinary interest, that will be out of 360 days, okay? Just remember, exact interest means 365. That's the exact number of days. Ordinary interest means 360. Easy way to remember that is when you see ordinary, starts with an O, 360 ends with a 0. They kind of look the same. So that's one way to help you remember that. So we're going to take our calculator and our 50,000, multiply that by 0.08 or 8%. And we're going to multiply that by 180 divided by 360. And we get an answer of $2,000. So they want to know what is the maturity value of the loan. So the maturity value, we're going to take our 50,000 and we're going to add to that the interest amount, which is 2,000. So pretty simple here. We will owe $52,000 after the 180 days. All right, I'm going to keep going through these notes. If you at any point need to pause, rewind, rewatch the video, whatever, you feel free to do that. Watch it at your own pace. So if I'm moving through the problems too fast for you, like I said, just stop and rewind, all right? So what we are going to talk about next are installment loans, okay? So installment loans are what you think of about a typical loan, okay? So an installment loan is you take out a loan from the bank, whatever it is, a personal loan, a car loan, mortgage, some kind of loan, and you will repay that over a period of time, spreading it out over equal payments, okay? So like if you take out a $1,200 loan and you pay that back every month over a year, you're going to pay $100 per month, okay? Now we are basically just looking at the amount that you will have to repay for today. There are other things that go into this, mainly interest rates and other things like that that will add on to this. We'll talk about some things as we go through this loans chapter, but right now we're just talking about the basic concept of installment loans, so that's what we're going to be focusing on. A down payment, the down payment is the amount that you pay up front. So for example, let's go back to my $1,200 loan amount. If you take out a loan for $1,200, and let's say you had $200, okay? So if you put $200 down payment, that means that you're taking $1,000 will be the amount that you are financing, okay? So the down payment is the amount of money that you put up front, and then the amount financed is the rest of it. So if I take out a loan for $1,200, I put $200 down, I'm financing the other $1,000, okay? So this happens a lot with vehicles. It happens. It doesn't happen every time with a vehicle because there are some promotions and things like that where car companies will say $0 down, which is basically just saying you don't have to put any money down. They'll give you a loan, you take the car and make the payments. One type of loan that happens every time is a mortgage. Okay, anytime you take out a mortgage to purchase a home, you will have to put some amount down. A lot of banks like you to put 20% down. You should put 20% down, because if you put less than 20% down, you have what's called PMI, which is your mortgage insurance, which basically just means that you have to pay an extra percent on top of your normal loan amount. Interest amount, which might not sound like much, but if you take out a loan, let's say you take out a loan for $100,000, and you have a 1% interest on that, that means you have an extra $1,000 every month that's going towards this PMI. So anytime you take out a mortgage, 20% should be your starting point. Okay, that's why it is very difficult to buy a home, because having 20% down is it's difficult to do. You don't need to have 20% down. There are a lot of loans right now that you could put 5% down or something like that, which makes it more possible for people to purchase a home. But then what that means is that if you only put 5% down, until you get to the point where you have 20% of that loan paid off, you will be paying that 1% PMI. So it's very, very, I would encourage you a lot. I would strongly encourage you, if you ever consider purchasing a home, to have that 20% down, so you don't have to pay that extra amount, which can lead to thousands of dollars. Yeah. So anyway, that's my little speech about that. So here's the three things we're talking about: installment loans, down payments, and amount financed. So let's go ahead and get into this. Tasheka is buying a new refrigerator for $1,399. She made a down payment of $199 and financed the remainder. Now, we are not looking at the interest rate or how much is she paying per month. We're not looking at any of that stuff. We're just looking at what is the amount financed. So pretty straightforward. We're going to take the total amount for the refrigerator. So I don't like the way that looks. Let's start over. $1,399. And we're going to subtract the amount that she put down, which was $199. All right, so we break out our calculator. We do $1,399 minus $199, and she will need to finance $1,200 for this refrigerator. Now, for now, this is all that we are doing, okay? So don't look into it too much. There are other things that go into this, but this is what we are doing for now. Okay, so how much did she finance? She had to finance $1,200. Also, another thing down here, Smart Notebook, just ignore this. If I had my smart board, which I don't even have a smart board in my classroom, but if I did, that would go away because I'm doing this on my laptop. It's going to be there, so just ignore it. All right, next up, you want to purchase a new TV. All right, a new TV comes out. This TV is just under $2,000. It is $1,999.99. You are able to make a down payment. Let's see, you were going to put $200 down, but you wanted to have a nice round number to finance here. So you put $199.99 down. That should be a 9. Kind of looks funny. And we want to see how much are we going to finance. So you take your calculator, you do 1,999, you subtract 199.99, and you can see that we have $1,800 that will need to be financed. Okay, $1,800 that needs to be financed. The other way that you could be asked these questions is in a percentage form. So Rebecca purchased a new washer and dryer for $1,140. She's going to use the store's installment credit pay to play. I'm sorry, credit. That's messed up. That shouldn't be in there. She's going to use the store's installment credit to pay for the items. So basically, like if you go to Lowe's or something like that, Biters, these people, they often will offer you some kind of financing to purchase whatever it is, whether it's furniture or appliances or whatever. So that's kind of the concept that we're talking about here. So I want to know how much is financed if she made a 20% down payment. And there are two ways to do this. Those of you that have been doing the other way, the alternate forms, will recognize this. But if not, what we're going to do is we want to find out how much is 20%. So a lot of times stores will say, all right, well, we can finance this, but you got to put 20% down. So we want to see how much is 20%. So we're going to take the original amount, 1140, and we're going to multiply that by 20%. Okay, so again, 1140 in your calculator, multiply that by 20%, and you can see that Rebecca will need to put $228 down on this washer and dryer. But that's not what the question is asking. The question is asking how much did she finance? So the one option is to take your 1140 and subtract from that the 228 that we just solved for. Okay, so 1140 minus 228, plug it in your calculator. She will be financing $912. Okay, that is what answers the question. Those of you doing the alternate form, this is basically what you're going to be doing because this is the way that you've been thinking about these problems. If she is putting 20% down, that means she's going to be financing the other 80% of the washer and dryer combo. So if you take in your calculator and you do 1140 times 80%, you're going to get the same amount of $912. So that's the alternate way of doing that. You can do it this way. That's perfectly fine. Just keep in mind that however the question is being worded may kind of direct your process here. Because if I'm asking you how much does she have to put down, then you're going to want to do it this way. If I ask you what is the amount being financed, then you may want to do it that way. So that's entirely up to you. The answer is what I'm looking for. So depending on the question, you may do your problem a little differently. All right, last problem here. We are going to purchase a new set of couches. You want to get a sofa love seat for your living room, and it costs $23.99, so just under $2,400. You plan on using the store's installment credit to pay for this, just like in the last problem, of 10%. So you got to put 10% down. All right. What amount will you have to finance? So again, I'm going to do it this way, and then I will go through and do it the other way. If you are doing it the other way, you're basically going to look at $23.99. And now think to yourself, if I have to put 10% down, how much will I have to finance? And you should realize that you have to finance 90%. Okay, so however you want to look at that, it doesn't matter. So $23.99, and if we multiply that by 10%, that's basically just going to be 200. Where's my cursor? There we go. $239.90. So to figure out what is the amount that needs to be financed, we're going to take our original amount, $23.99, subtract the amount that we put down on our down payment, $239.90. All right, 2399 minus 239.9, and we have to finance $2,159.10. Which again, if we did it this way, the $23.99, and we multiplied that by 90% or 0.9, you can see we're going to get the same number. So those of you that did it this way, oops, back up, I wrote a 9 before my 5. Oh, took away too much. 2159.10. Same answer, regardless of how you do that. Okay? So those are the two ways that you will be asked these problems, either, by the amount that you put down or by the percentage that you put down. But either way, it is still the same concept of figuring out the amount that you need to finance. All right, so the homework problem on the back, if you do this one, choose whichever method you want to use. It doesn't really matter. Either way, when you do this, you should end up with $68,000 is the amount that you will need to finance. Okay, so check that answer with whichever method you choose. So, okay, one more time, I just want to mention, make sure that if you are, I don't need to see your notes. Okay, you don't need to submit notes to me. Those are for you. But when you are doing your homework, your textbook problems that I put on for this assignment, make sure that your work is legible. I need to be able to read your writing. If it's too sloppy, redo it. If you're taking a picture, make sure that your picture is clear. If it's blurry, you're not going to get credit for it if I can't see it. If you're doing it online, just Cami or Doc Hub, make sure that when you submit that, it is made available for me to see, because sometimes people submit those and I'm not given permission to view it. And if that's the case, I'm not going to be able to see it. And again, you won't be able to get credit for it. So you got to make sure you're doing that. So, all right. If you have any questions, feel free to send me an email or private comment and let me know.